The next question is, the way the markets are landing in 2025, the best strategy for the experienced and rational CSI investor is a multiple choice. ETFs, stock picking, 60-40 portfolio, or a mix of all three. Is 2025 a year to buy and hold or a year to take advantage of volatility?
Okay, so option 3, 60-40 portfolio, I haven't been a fan of for well over a decade. However, for some investors, utilizing cash and equivalents in your portfolio, if you expect to be in need of that cash within the next 5 years, has always been given. Should it be 40% of a portfolio? Like I said, it's been well over a decade. I've been saying having 40% of a portfolio in bonds has not been a good idea, but short-term bonds, absolutely, if you think you need the cash. Over the ultra long term, stocks are just going to outperform generally, but that's only if you plan on holding for the ultra long term too. So let's go with ETFs and stock picking, a mix of the two. And again, this probably depends on the person, and you could say it depends every year, not just in 2025. ETFs are a great place to start. If you don't have a lot of money to get started with, if you have, generally speaking, 10,000 US dollars or less, you're going to have a really tough time properly diversifying. You should probably be looking at 10, maybe a dozen. Here personally, we have 20 roughly core portfolio holdings, and that's properly diversified, we think. So an ETF gets you that instant diversification if you don't have enough money to pick. Now, in 2025, what could pan out here, if we do get broad-based earnings growth across the board, across sectors of the economy, for the first time since the last bear market, 2022, 23, because of the Fed interest rate hike cycle, if we do get that broad-based earnings increase, stock picking might be harder in that you might be picking one stock that goes up, but everything else went up too. The real merit of that buy may take a number of years to really see. I don't think we're going to pick another App 11 here in early 2025 like we did last year. That isn't to say we're going to stop buying individual stocks. On the contrary, we're going to keep doing that ourselves personally. And we've already made some picks. If you read through our 2024 reviews and initial 2025 outlooks, we've already talked about what we're looking at for this year on an individual stock basis. But I think especially this year, if you're just really unsure of what to do, if the S&P does notch 15% earnings growth, if S&P 500 notches that kind of earnings growth, you'll be very happy just owning a broad-based ETF, I believe.